Hello once again, grade 12s. I'm back with another video for you to better understand your financial statements and prepare you for your examinations. So now we're going to be doing a cash flow statement, and before I get into it, I just want to explain the statement and what it looks like, how it works. So the first thing you're going to see if you look here on my screen is that the statement is subdivided into basically three main portions, and then there are the totals. So there is the cash generated from operations. This basically defines, okay, firstly, the cash flow statement deals with cash only, right? So it then shows the company the clear representation of how much cash is going out of the business, how much cash is coming into the business. So in this particular situation, we have cash generated from operations. These are the cash that you generate as you are conducting business, as you are running your business throughout the period. And then cash flow from investing activities. So this is cash coming in or out of the business as we do investing activities. And investing activities fall under things like buying assets, taking loans, starting deposits, all of that stuff that has to do with an investing activity. And I think you did this as well in your curriculum at school. You learn about operating activities, financing activities, and investing activities. It's very important to know that information now when you're dealing with the financial statement, with the statement of cash flow, right? Then the last portion is cash flow from financing activities. So that is then your loan, that is your sale of shares. So any activity that you do to bring money into the business, that then is then recorded as a cash flow from financing activities. So what we're going to go about doing first and foremost is to add to the knowledge that I've just given you by filling in what from our adjustments falls under each of these categories, and then I will complete just a few of the adjustments to show you how to go about it. But other than that, it's quite a simple statement when you know your stuff, right? So, right, if we go back here to my statement, right? So we can see that here there are fixed assets. Fixed assets will fall under our investing activities, right? Then under investing activities again, you'll find you also have to look into this table as well. All of this information actually is very relevant. There's never really there are situations in an accounting exam where they will give you information that is irrelevant to test whether you can distinguish which information is material or not, which is something we spoke about when we were doing our GAAP principles, was that we spoke about considering the principle of materiality, right? Which is considering what is material and ignoring what is non-material. So they've given you, here as well, there are adjustment for shares, and adjustment for shares, like I said, go under the cash flow of financing activities. And then you have in your information, all these other information like financial assets, retained income, all of the stuff that you can then find a way to put into your cash flow statement. So I started a bit here just so I can speed up the process, and I filled in the cash generated from operations. And here from our adjustments, we have interest paid, we have taxation paid, and we have dividends, right? Then under cash flow from investing activities, we had purchase of fixed assets. So purchase of fixed assets. And we had sale of fixed assets. We can't just say assets in an umbrella term because the purchase and the sale affect the cash flow of the business differently. One will affect it in an inflow, one will affect it in an outflow, and so that's why we have to separate as per transaction. And then change in fixed deposit, right? Obviously, this is not a set format. The set format is what you see before you fill in. What you fill in are subheadings that pertain to the adjustments that you would have been given. So pay attention to your questions, pay attention to your adjustments, read carefully. You have a whole 3 hours to do a lot of good with, right? And then cash flow from financing activities then become your sale of shares. I just want to make sure you see that. Your sale of shares, right? Then it is your shares repurchased, which we dealt with in the ordinary share capital statement, right? So sorry about that. Share repurchased. Sorry about my handwriting, but you know what I'm doing and what I'm saying. Okay, repurchased. Then we have the repayment of loan, right? And where am I getting all of this stuff again? From the adjustment, right? And you can see here that everything that I've written down there basically shows up on C, D, and E. By the way, if you need this past paper or any past paper, like I said before in the first video, all of the stuff is available to you on the internet. Use the internet positively and get A's in your matric exams, right? So I'm only going to do 1 or 2 adjustments just so you can see what the gist is, and then you guys will know what to do afterwards. So for taxation, we have in the adjustments here, we have an extract from the income statement, which is income tax, which was 76,600. Oh, sorry guys, you couldn't see that. There it is, the income tax, 75,600. And then we have another adjustment here that says SARS income tax, and we have a credit of 12,500 and a credit of 8,000 rand, right? So our income tax amount is basically the balance. So we have 75,600, right? Then from the year before, we have a debit of 8,000 rand, and because income tax is an income, it then falls under the equity side. On the equity side, we said that an increase happens on the credit side, a decrease happens on the debit side. Therefore, the fact that we have a debit from 2019 then means we should subtract 8,000 rand from here. And then we have a credit of 12,500 here on our income tax. Therefore, if it's coming from SARS, it means it is another subtraction from us as well. So we say a negative 12,500, right? And remember what I said, that you do the opposite in order for the equation to balance. So if last year we debited, this year we credit, right? And if they credited it under SARS income tax, we need to debit it here, right? And a debit for an income is a subtraction. It means it shows a decrease rather than an increase. And therefore, now that it's like that, we just find the total 75,600 minus 8,000 minus 12,500. Guys, please count your zeros to make sure that you don't make the mistake of, instead of writing 12,500, you write 1,250. You don't want that mistake, because that's going to mess up your totals. Even though the great thing about accounting is you can always get method marks, which is awesome. The fact that you added or that you subtracted will give you marks. The fact that you carried down the same amount and added to get a total will give you marks. So this is one thing that I love about accounting, that they give you marks for showing that you know your work and you know what's supposed to happen, even if you don't get the accurate total. So 55,100, right? The next one that I'm going to do with you is shares repurchase, because I didn't do it with you up here, but it's the same. So shares repurchased, we repurchased how many shares here? We repurchased 40,000, my bad. So 40,000 shares multiplied by, and here in our adjustment, they let us know that on the 1st of January, 40,000 shares were repurchased at 4 rand 10 cents. So we know that our amount is at 4 rand 10 cents, because that is our, and okay, another thing that I wanted to mention is, for amounts that you add, you put them as they are. for amounts that you subtract, you put them in brackets, right? So our 55,000 there, I was supposed to put it in brackets because the taxation is going to result in an outflow of cash for us. And then shares repurchase is going to result in an outflow as well, because we had initially issued the shares out and got money into our business. And then upon repurchasing them, we then have an outflow of cash. So don't think about what is happening to the account. Think about what is happening to cash. Or just specifically in terms of dealing with the cash flow statement. So we have to say now 40,000, you can still see that, times 4 rand 10 cents, right? And that's 164,000. Okay, so that's basically all I'm gonna do for you for this particular statement, because I'm not gonna go through the whole thing. I feel like it'll be very important for you to practice and see what you struggle with. But what I'm showing you here is how to take into consideration the adjustment, see what's going on, and also take into consideration what statement you're dealing with. Sometimes if you're dealing with the statement, like let's say if you're dealing with the statement of shareholders equity, there are specific things that don't go into the shareholders equity. So when you see them in an adjustment, you know that you don't have to consider them for that statement. So now we're looking at not what happens to the account, so not what happens to inventory if we buy inventory, but what happens to our cash when we buy inventory. That is an outflow for us. So yeah, I hope that this helped you, and I hope that it's going to help you in terms of answering the next questions. If anything, accounting is a possible subject, is a subject you can excel in. So I hope that this video helped you. Other than that, thank you so much for watching, and I will see you in the next video. Bye.